So if you'd have told me back, 1st of January, that even if we ended up here near 2,600, we'd have a 30% year, I'd have said that's A-OK. And in terms of silver,
Hmm.
I was silver gains or losses every year since 2009, since, the great financial crisis when everything changed across all currencies, all nine major fiat
Hmm.
currencies. And one thing that stood out to me is the three prior periods where silver had a really big year. All three of those were followed by another big year.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, it is now October 9th, and price of gold looks like it's getting ready to spike again. But more importantly, the price of silver. We were at 32, almost $33 silver. Let's get the absolute insider take on this. Craig Hemke, tfmetalsreport.com, is with us now. If you got a question, comment for Craig, myself, email kl@kerrylutz.com. Craig, so where are we now?
Well, for now, at least, we're just at another higher low part of the chart. A bull market, particularly in the COMEX gold and silver futures, is almost always defined by higher lows and higher highs, where you're just kind of stair stepping up. And that's kind of where we are now, in not only in gold or silver, but also the mining shares are doing the same thing. We'll see where we go from here. I'm optimistic that we can take another run up before the end of the year.
Mhm.
But at the same time, if you'd have told me back in January, with all that we knew that was coming, everybody was factoring in like 6 or 7 rate cuts, on New Year's Eve last year. And we knew that wasn't going to
Yes.
be the case. So we figured it was going to be kind of a tough year, at least to start. And it wasn't. So if you'd have told me back, 1st of January, that even if we ended up here near 2,600, we'd have a 30% year, I'd have said that's A-OK. And in terms of silver,
Hmm.
I was silver gains or losses every year since 2009, since, the great financial crisis when everything changed across all currencies, all nine major fiat
Hmm.
currencies. And one thing that stood out to me is the three prior periods where silver had a really big year. All three of those were followed by another big year.
Hmm.
So the most recent being 2019 and 2020. And so silver's up about the same percentage as gold. Leaves me kind of optimistic that we'll be able to extend this into 2025.
Think so, huh? So, so hold the course, huh?
Well, that's been the case. I have people on my site. I remember getting this 3, 4 years ago, but I still get this occasionally. People on my site, they're like, thank you for getting me to stay with this. Because, man, it was a pretty lonely sojourn back in 2013 and 14. I remember the summer of 2015. It was a
Oh God.
Saturday. It was the weekend Wall Street Journal. Do they even do that anymore, Kerry? I don't even know. But
The Wall Street Journal.
the weekend
Oh,
edition.
yeah, that was like a fun show for a while it
Well,
lasted.
they used to put out an actual hard copy.
Yeah.
And I was staying at a hotel. I was at a wedding with my in-laws, and my father-in-law comes up and slaps it down in front of me because there's an article there about gold is just a pet rock,
Hmm.
and
Just that's
price
what
was hit.
that's what what's his name?
Jason
Buff-
Zweig.
Buffett said, we spend all this money digging it out of the ground, then we dig a new hole, bury it, and
Put it
we
back.
spend all this money guarding it, right?
Right, exactly.
Barbarous relic.
So, that was gold was maybe 1,150 then, and it went down like 50 that next Sunday night. And it's pretty ugly, but we hung in there. And the reason why my faith never wavered was the math, man. It is what it is. And we're now $37.5 trillion in debt. It's not getting any better. Carry this last burst in gold up through 2,500 and through 2,600 began about three and a half weeks ago when the monthly budget deficit for the US government for August was released, and it was for a month, $380 billion.
I remember.
And that's when, it was almost like the thing I keep saying in interviews, it's like that grabbed hedge fund managers and, these home office, multi-billion dollar, and just kind of shook them by the lapel and said, "Do you see this? 380 billion in a month." Another chart from Ronnie, that's a Bank of America research. The most recent one they did, 71% of global financial advisors have less than 1% or 0% of their clients' assets allocated to the precious metals or the mining sector. 71%. Another 24% have less than 5%. So this, it won't take much. And that's why, again, the math is a math. I feel the sector is grossly underinvested for the protection it provides. And that's why we just keep hanging in there.
Hey, and the crypto, it's kind of serving a similar function here.
Mm-hmm.
Bitcoin, while we're speaking, I hate to give Bitcoin prices because it's so volatile. They change so quickly. But right now, for this particular instant in time, it's $62,185. For something that really has no intrinsic value, it has a lot of value.
It does. I'm sitting there doing the math. What is that? My cost basis on the little bit of Bitcoin I have is about $620. So I'm trying to do the math on what is that, 100,000%? I don't know, whatever it is. So I've never understood this thing about you can only own one versus the other. To me, that never made any sense.
Yeah.
There are alternatives to your fiat dollar. And why wouldn't you own? And people, it's like the central banks that we've talked about before. This is the third year in a row of record global central bank gold demand. Well, what are they doing? They're taking their dollar reserves that they've accumulated and they're diversifying some into gold. Well, that's all I've ever suggested for the individual person. Take some of your dollar reserves and diversify into gold. This is not, it's not complicated.
If people automatically bought gold, it would force the world's central banks and the world's governments to stop what they are doing.
Yeah.
Think about that. If every person out there had a gold and silver account and they added to it monthly, because they wouldn't be able to control the prices then, right? Because you'd have worldwide demand swamping the algorithms, basically, right?
Yeah.
So it would legitimately price these metals at their true worth in fiat currencies. And then, the canary in the gold mine, the cat would be out of the bag. They wouldn't be able to hide it, right?
Yeah, right. You think about who hates gold the most, right?
Mm-hmm.
The bankers and the politicians. And why? And I shouldn't just say bankers, politicians, and anybody in finance that benefits from the unlimited creation of the dollars and the debt from which the dollars come. Mm-hmm. And if that's the system that your company, that your net worth, whatever, relies upon, you're going to bash all the alternatives all day long. And that's what they do. You'll never hear anybody talk about this kind of stuff on CNBC because their beak is dipped by the financial services, the mutual funds, and everybody else, right?
Them and big pharma. You have to stop taking drugs and buy gold.
Right.
That would be the death knell to the system. Stop taking drugs, buy precious metals and crypto.
It's really, that's a good analogy. It's really about the same thing. Here's what I gave you something though that I think is a really good present day example for people to understand. Even within this pricing scheme that relies upon all these alchemic alternatives, futures contracts and unallocated accounts and ETFs and all this stuff that's gives you exposure to the price, but not the real thing. Even within that pricing scheme, we can look at, and this is just something that I think people can really grasp. The 400 ounce bars of gold, the London bars.
Yeah.
right? Everybody's seen those things. They see someone holding one and it's like, oh, wow. And the racks of them, in the vaults. 400 ounces is the London good delivery standard.
Mm-hmm.
When Nixon closed the gold window back, whatever now, 53 years ago, right?
Yeah, it's hard to believe. I
One
remember.
of those bars was exchangeable or cost $14,000. Okay. 25 years later, in the late 90s, one of those bars cost $110,000. Well, as the spot price of gold moved up through $2,500 about 6 weeks ago,
Worth $1 million.
2,500 times 400, one of those bars is suddenly $1 million. What better illustration? Because the gold has just sat there, right? That bar from 1971 is still that bar. You can't make the argument about your house or, the adjustments. What are my senior moment with the CPI, the terms they use, to say that the not holistic adjustments. What's the word that they anyway? Hedonic adjustments. There's no hedonic adjustment to a bar of gold, right? Here's your bar, same bar from 1971, but the price is $1 million rather than 14,000. What better example or illustration is there of the destructive power of the fiat devaluation and that's why you own gold.
Ludwig von Mises said only government can take a valuable commodity like paper and make it worthless by putting ink on it.
I love it.
It's kind of wild, and you might have to dust off that bar because you haven't done anything with it. It's just been sitting there collecting dust. Craig, I don't know if you ever went to the Federal Reserve's Gold Vault, but they have a tour there. I did it like 15 years ago. I wrote about it on the site on Financial Survival Network. But, there's all this gold. Well, one thing that impressed me was that in order to handle the gold, you had to put these magnesium tips on your shoes because it covered it. Because if you dropped the bar, it would crush your foot. They had to wear these special things. But, it's kind of shocking, but it isn't because, look, the man's nature is always to try to get something for nothing.
Right.
Some people call it investing in the stock market, but they want to create all this money, give it to people, give everybody what they want, whatever it is, no matter how stupid it is. If it's a degree in puppetry, an advanced degree in puppetry, or, medieval French lesbian studies, whatever it is, they want to give it to everyone. And when money was real, they couldn't. But now that money doesn't really exist, only in your mind, only in the bank of a computer on the disk, now they can do this, Craig. It's alchemy, like you said, financial engineering at a level that nobody in their right mind would have ever believed.
Yeah. And I mentioned that math, the certainty of the math, the compounding of the math, right? The compounding, let's see, when we went 25 years, even under this pricing scheme, from basically 10,000 to 100,000, another 25 years from 100,000 to $1 million, another 25 years, what are we talking? 10 million, right? Okay, $25,000 gold. And again, what that means, I don't know if the system's going to continue for another 25 years. I don't know if it'll make another 25 months. I have no idea. While we're in this kind of crack up boom phase that you're describing, there are going to be all kinds of debt-based financial assets that go great. They make all kinds that their gains exceed the rate of inflation, the rate of devaluation, right? So nobody should ever cash out everything and put it into gold or silver or something like that, because you can't know when the thing finally implodes under its own weight, and there are opportunity costs along the way of waiting. But what you definitely have to do is invest yourself in a way that your gains keep up with inflation. And gold, just in that, segment of your portfolio, that part of your asset allocation certainly has proven that over time.
There's no question, and it's not like we're the stop clock brigade here. You know, it's not
Yeah.
like we're right once every 10 years. This is an ongoing process, like you said. It's been going on since 1913, but
Yeah.
really picked up steam in 71 when the gold window was closed, when when the dollar broke its final connection to gold. And it's pure math. It's really that simple, and they can slow it down. Maybe they can hide it. Maybe, we have these busts, these financial crashes, which we're probably due for one now, because every 17 years in real estate you get a crash, right? We're probably due for one now, and certainly in the stock market we're probably due, and and then we begin the process anew, right?
That is, I mean, I believe all that. Yeah. The cycles that are definitely in play. The only thing you wonder about is how long, the plates can keep spinning and they can keep the balls in the air. When you have everything run by computer, right? I
Hmm.
mean, you look at, like, for example, look at the VIX index and how many um, buy programs, automated
Oh
HFT
yeah.
algorithmic programs are based off of that. If the VIX is going down, then risk is coming out. So we should be in risk assets. Well, then if you can just simply control the VIX, then you can get the computers to do what you want them to do.
Yeah.
I mean,
That's
it's
it.
not that. So
That's
you
it.
like to think, I mean, look, I'm the guy, I've probably called 10 of the last one stock market crashes. And so I'm not, I just prefer not to fiddle around with it. Carry everybody that how do I want to phrase this? There are so many interests aligned in keeping that afloat. I mentioned CNBC and the like, and how they're always on the long. Now, maybe it's good for ratings every once in a while. Market crash, join us tonight at 7 o'clock, that kind of thing. But everybody's got their beak in the trough and they have an interest in keeping it going, all the way down to the economic data that we get. It's all designed and put out to influence it's like all of those job report Fridays
Hmm.
that were, oh, magically beat expectations, wow, through all these different seasonal adjustments and the like.
Expert surprised, right?
And then they
Expert
come back
surprised.
And then they come back last month and they say, you know what, we overstated things by 815,000. Well, do they then have they then overstated what the stock market did on those 12 Fridays, or do we get to reprice gold for all the beatings that it took on those Fridays on the fake news? No.
Mm.
So there's so many forces aligned to keep the plates spinning that
Yeah.
you don't really want to get in the way of that freight train. And you don't want to completely avoid, certain sectors because you're just waiting, you don't know. You don't know when the end is coming. All you can do is prepare for it. And that's, where gold, silver too have a part in your portfolio.
Hey, I like to follow the housing stocks because to me,
Yeah.
they're, they know what interest rates are going to do before the Fed knows. You know, you just look at them and guess what? I looked at five or six of them. They're all trading at or near their all-time highs. Lennar, Toll
Mhm.
Brothers, KB Homes, the whole group is trading at these all-time highs. And that could only mean that interest rates are going down. And what happens when the next 50 basis point
Yeah.
rate cut? Next 50 basis go, and then the market will go crazy, right? Or maybe it
Yeah.
won't. Maybe we'll get to the
Well,
point where it doesn't care anymore, where it sees the underlying collapse that we're approaching. I mean, at some point, the plates, I would say in '07 and '08, the plates were all spinning, but the guy spinning them had to sneeze, and a couple of them hit the ground, What happens when that guy has a heart attack this time and all of the plates come crashing down?
yeah. Yeah. And that moment will certainly come. And then where do we go from there? I mean, look at China. China rolled out their monetary bazooka 2 weeks ago, and everything shot up, some of the biggest days in the Chinese stock market ever. And then they
Boom.
closed for a week for their glorious anniversary of the founding of the communist
Worthy of
spot
celebration.
beacon on the hill. And when they reopen, boom, it goes right back down 10%. And now they're talking about what are they going to do this next? Apparently there's some big meeting and announcement coming on Saturday. What are they going to do? Even more? So you get into that point where
The Minsky moment, right? Isn't that the Minsky moment?
right, yeah, and you're kind of
Yeah.
just pushing on a string at some point. You can't keep up, and that'll come here as well. It's just gonna, doesn't matter who wins the election. They're going to
Oh,
be in
yeah.
for some tough sledding next year. That you think about here, even in what was allegedly this strong economy, the U.S. fiscal year just ended on September 30th with pretty close to a $2 trillion annual deficit. What's going to happen in the next fiscal year in a contracting economy where government revenues and tax receipts and everything else fall by $1 trillion? And then government spending picks up with stimulus. So suddenly you're running 3 trillion.
4, 5.
Yeah, exactly.
Hey, well, I did a useless exercise just for the fun of it because I had some time to kill. I had Chat GPT balance the budget without a tax increase. And I said, give me a list of 100 agencies we could just shutter and never even know they were closed. And some of these agencies, Craig, you never even heard of them. They were
Yeah.
so obscure, like I can't even remember them now. This was a few months ago. But hey, if Elon Musk gets in there and he actually can do anything, Elon Musk will be the equivalent of the Grace Commission. Remember the Grace, Peter R. Grace, from the Grace Chemical Company, which was long since acquired. And in the 90s, they had the Grace Commission, and he showed them how to balance the budget. But you know how far that went?
Yeah.
It's like, yeah, like get real here. Who's
Right.
paying our salary? It's not you,
Right.
Grace.
Right.
It's these interests, big pharma, big chemical, big oil, big agra, you know, all these things. Hey, I want to touch on one thing, though, that I know you are concerned about, and that made me think twice that maybe this election might have a little more significance. I'm not talking about the economy. I'm not talking about the dollar interest rates, whatever. RFK Jr., deplorable character, person I know him personally, despise him. But he did one thing, which was make America healthy again, that we are the most unhealthy nation
Mm-hmm.
the world has ever known, and that this is a national crisis. So for that alone, I can forgive him all his sins, and they are manyfold. Um, you know, because the health, all the gold, all the money in the world isn't going to do anything for you if your health is down the tubes, right?
Yeah. Kerry, this won't surprise you, but I'll turn this back to gold and the Fed as well. Anybody can pull up all the charts that show income inequality and wealth inequality all began to diverge back in 1971. And what happened in 71? Again, the wealthy have gotten wealthier. The old line from U2, God Part 2, 1988, the rich stay healthy and the sick stay poor, right?
Yeah.
And the gap just keeps widening. And so it is the lower income people that don't have any money, that have lost their good jobs. So they're working 3 part-time jobs. You can see that in the jobs report. They're
Mhm.
doing everything they can to make ends meet. And they're shopping and eating the crap that's sold by Dollar General and and in the grocery store. Everything that's got all the seed oils and the preservatives and all that stuff because they can't afford to eat any better. Or they live in the city and they don't have any
Yeah.
alternatives to eat any better. And so they just get fatter and sicker and more drug dependent. Kerry, I'll give you one more thing. Everybody, they talk about, oh, this is so great. Look how great the economy is. Yesterday, like this haircut, right?
Yeah.
I just got a haircut yesterday. I'm driving through a kind of a neighborhood to get to where the place is where the guy cuts my hair. And all of a sudden there's just car after car, bumper to bumper, parked along the side of the road. I'm like, well, this is weird. And then I see a church coming up about a block away. And I'm like, geez, who died? Must be some, big shot funeral here. No, I get to the church, food pantry this way.
Oh my God.
There must have been in this serpentine thing 100 cars wrapping around the neighborhood, going up one block, over one, and back up, all to just get. And so I'm like, holy crap. So I come back to my house the same way, and there's still 100 cars, maybe down a few, 75,
Wow.
full of
So
mainly
sad.
single women, moms that, just trying to feed their family, that kind of stuff, all just begging for, what, $20 worth of groceries?
Yeah,
Oh, but
government
this is a
cheese.
robust. Everything's great. Give me a break. Just
Yeah, it's
terrible.
just lies. I mean, when you see that, it really brings it home. And like you said, people running three jobs, to try to make ends meet. And but the employment numbers are great, Craig.
Oh,
We should
everybody,
all be happy.
yay. Stock market went up 1% today. It just makes me sick.
Yeah, well, hey, we'll leave it on that note. But make sure you go over to Craig's site, tfmetalsreport.com, and get to subscribe to it, because I think with inflation, I don't think you've inflation adjusted your subscription prices.
It's been
Starbucks,
4 years.
Starbucks just raised the price of my damn latte from 5.62 to 6.37.
There you go.
So,
Well, about two of those lattes with tax will get you a month at TFMR.
yeah.
How's that?
Man, so at least there is a place on this planet where inflation is not driving up the cost. So tfmetalsreport.com. Man, I love the site. Love your commentary, your podcast. We've known each other over 10 years now, and we're the prophets, with an F and with a PH, right?
More pH than F's, but
Yeah,
that's
well,
okay.
all
Well,
right.
where I get the F's? Hey, F you, Hemke. I get that. But anyway, you get it.
I love it, man. Hey, so go over to Craig's site. Make sure you subscribe. Tell him we sent you. And if you got any questions, comments, kl@kerrylutz.com. You'll have a link to Craig's site in the show notes to this interview on financialsurvivalnetwork.com. Sign up for your free newsletter. Craig, we'll talk to you again real soon, man. Be well.
All the best, my friend.